Hello everyone, I'm Dan Basse, President of Ag Resource Company, wishing you a very happy 2016. Here at Ag Resource, we've had a good year. We thank everyone for their support, their patronage, but more importantly, their feedback. We're not a brokerage firm, we're not a trading firm, we're a pure research firm, and so to get your feedback on how it affected your operation is always helpful to us, and 2015 anyway was a good year in that regard. Bill, as we think ahead to 2016 and we start to migrate our research from last year to this year, I mean, the things that really stand out to me is that as I look at the world grain crop last year, and I'm now combining corn, wheat, and beans, we had a record. Not individually, wheat and soybeans were record, but not corn because of the dryness in Europe, France, and portions of Eastern Europe, and then, of course, the extreme wetness we had here in the Midwest. But how has that really affected the U.S. export share? And again, we've got this big supply of grain globally. What is happening to the U.S. in terms of its posture in the world market?
Well, I think most dramatic of all is that U.S. wheat exports, according to the USDA's own projection, going to be the lowest in 44 years. They're anticipating that next year exports will improve slightly. But they're also projecting that we're going to see ending stocks, U.S. wheat ending stocks, exceed 50% of usage. And I don't have it off the top of my head, but it's been at least a decade or longer that we've seen U.S. wheat stocks that build that large. In terms of corn, looking at the first quarter of the year, September, October, November, it looks like U.S. corn exports were the lowest in some 25 years in that first quarter. Now, the USDA is projecting that exports are going to recover somewhat, but based on some of the data that we're looking at the pace of shipments, particularly coming out of Brazil, right now it looks like they're going to possibly export as much as 35 to 36 million metric tons. That is a record. And that exceeds the USDA's projection of 32 million metric tons. If exports out of Brazil are as large as that, I think USDA is going to have to take down their export projection. Currently stands at 1,750,000,000. I think they have to take it down at least 50 million, if not more, as the year progresses.
So we've got a USDA that'll likely cut wheat, corn, and probably soybean exports in the year ahead. So there's really a lack of demand story. And I guess as we think about corn, wheat, and soy exports all combined from the United States, if our data is correctly, it's going to be about 28% of the world total. That's a record low in a non-drought year and would be the lowest going back to the 1960s. Just 40 years ago, the U.S. used to capture 60% of world grain trade. That percentage has now been more than cut in half.
Yeah, it's not just a matter of the currency issue where the value of the dollar is going up, putting us at a price competitive disadvantage relative to major exporters. It's also a matter of our cost structure. And I was surprised to see these two reports that came out of Purdue. They're on the University of Illinois Farm Doc site. And what they've done is they've looked at cost of production for corn and soybeans in the U.S., Brazil, and Argentina. And it turns out the U.S. is the high cost producer. So it's not just an issue of the value of our currency. And by the way, this study was based on the years 2012 to 14, before the big rally in the dollar. So there's a number of factors which make it look like the U.S. is going to really struggle to maintain market share, and in all likelihood is going to lose market share over the next couple of years if we assume normal weather in our major export competing countries.
Well, that kind of is a good segue, if you will, into our next segment, which I'd like to talk a little bit about Argentina. In the last 3 weeks, we've had two key events, both their ending of export taxes, or in the case of soybeans, cutting at 5% a year over the next 7 years, so that'll be zero virtually by 2022. And then, of course, liberalization of the peso. So all combined, we think this adds for an Argentinian farmer anywhere between $300 to $450 of additional revenue per acre. Bill, that's a big deal. I mean, as we think forward, why wouldn't Argentinian farmers plant more grain and really embrace this new policy that their new government has put in place?
Well, According to the people that we polled that work in Argentina or are specialists in Argentine agriculture, the view is that wheat area next year, because they're just harvesting this year's crop, wheat area next year could go up 25 to 30%. Corn area could go up 25 to 30%. Now, you have to keep in mind that soybean area is greater than all other crops combined. So it's unlike the United States. You can't have corn area, wheat area go up by 25, 30% without seeing a decline in some other crops. In the case of Argentina, I had expected some of these analysts to tell me that, we're probably going to see soybean area come down. They actually think it's going to hold constant. So what we're likely to see is some of this pasture land that Argentina has so much of possibly be converted over to cropland use. We saw a little bit of that occur in the United States, but in Argentina, you can go over wide stretches of the country where there's a pasture ground right next to corn ground or soybean ground, pasture ground. So in terms of the availability of crop area, potential crop area, it's there. The other thing is that I was shocked last week to see a $20 drop in the price that Egypt paid at its tender, when all of a sudden, out of the blue, Argentina puts in a bid and gets the lowest price by something almost like $20. And I'm wondering if something similar is going to happen once those 13, 14, 15 million metric tons of Argentine soybeans that have been squirreled away over the last couple of years. What's going to happen if we start to see fire sale prices being offered for those soybeans, some of which are reportedly in relatively poor condition?
Well, we've already seen it in meal. Argentina's undercutting U.S. meal values by $13 a ton. Mm-hmm. We know the Argentinian farmer is finishing up his planting. He's got another good crop coming. He likely will be a bigger seller as we go towards their harvest, which will start in April and May. Mm-hmm. So I think all the ingredients, but I think as you stand back from it and think to the new year, Argentina is going to be a export powerhouse. I can't think of another word that could explain their presence in the world grain market.
I agree. I don't think they'll ever match the potential that Brazil has.
Agreed.
But clearly, agriculture is got a huge boost, a huge increase in incentive to increase production, and assuming that they have trend yields, I don't see that their posture in the marketplace is going to diminish at all. In all likelihood, they could easily increase competition for U.S. corn in particular, and certainly in the case of wheat.
So, Bill, as we think about the United States having a diminished export share, the world being oversupplied at this moment anyway, how does Chicago, and again, we have Chicago, which is grappling between looking at U.S. balance sheets and world balance sheets, how does that all play out? Early in our careers, we only paid attention to U.S. balance sheets. Now that seems to be changing.
Well, I think it is changing, and I think it has already changed for wheat. The U.S. is only the world's fourth largest wheat exporter. 25 years ago, we were the largest. I don't see that changing anytime soon. And if indeed Argentina increases wheat area, our share is going to even get smaller. So the futures market is designed to reflect the value of grain that's deliverable to the principal markets, Chicago, Kansas City, Minneapolis. And you will always have those fundamentals play an important role. But since exports are the residual market for any surplus that's produced here in the United States, as our exports shrink even further and further, we're going to find that our prices have to adjust in relation to these international prices. There's also the possibility of imports. We've seen in past years when U.S. prices got very high in relation to world prices, U.S. wheat imports increased. I think in one year we even had 150 million bushels of imports, much of that coming from Canada. It's important to note that the Canadian dollar, I think, is at an 11-year low. Mm-hmm. And certainly we have seen surges in agricultural imports from Canada in past years when the Canadian dollar was low. In the case of corn, I think here again, over the last 5 or 6 years, The U.S. has progressively lost market share. They are still the world's largest exporter. But this year, the ABU, and by that I mean Argentina, Brazil, and the Ukraine, are projected to have about 55% of total world corn trade.
Wow.
And again, I don't see that declining. So even though the fundamentals of deliverable stocks against the futures contract do play a role, without the ability to export our surplus commodity and having to accumulate that commodity year after year, it will have an increasing impact on U.S. prices and drag those prices down.
So the message for our viewers is that everybody should be paying acute attention to the world grain markets in terms of what Argentina